Okay, we're going to get started. All right, a lot of you have been to the previous seminars where I've gone over how to set up the Fibonacci price work, also how to set up some of the Fibonacci time work. But even with that information, then a lot of people still ask me the question, how do you enter the market? Okay, so that's what this webinar is about. Also, how do you trail your stops? All those good questions. So let's get started with that. Everybody should be able to see the PowerPoint, and we will make it available for anybody who wants that. And hopefully the sound is still good. Okay, so what exactly is a trigger? Okay, a trigger is something that tells you to enter a trade, and I use it for entering a trade using one of my trade setups, okay, which would be either a Fibonacci price cluster, a two-step pattern, or a symmetry setup. Okay, these are the only 3 trade setups that I run in the chat room every single day. I also use timing. Not crazy about using timing by itself, but as long as you see a reversal on the chart and the chart gives you a price pattern that tells you you can use it, that's a whole other story, because then we're back to price. Okay, let's see. There are a lot of different types of triggers. I'm just going to show you a few different ones, and also my favorites. Okay, one, I use the TTM squeeze trigger. I imagine that some of you are familiar with that one. Okay, there are some people who will just use candlestick patterns for entries. Some people will use something as simple as a moving average crossover, or taking out a prior swing low or high. That's about all that you need to signal a potential reversal against one of the trade setups. Okay. Now, the favorite trigger that I have is using the the TTM trend and squeeze indicator. Now, I don't necessarily wait for the squeeze to fire off, though you can use that. Okay, but what I do like to see is the color change of the bars to indicate the reversal. I also want to see it take out a prior swing high for a buy trigger, or take out a prior swing low for a sell trigger. And then I either want to see the momentum indicator either flat or in favor of the trade. So if it's for a short, I want it to be either flat or below 0. If it's for a buy, I want it to be either flat or above 0. Okay, so that's what I like to see, and I'll go over quite a few examples of of using it, including a couple of setups from the last trading day or so. Now, if you're looking at a setup, for example, on a 15-minute chart, a lot of times I like to go to a lower time frame chart for an entry, so that you can get in as close as possible to the trade zone. Okay? Because if you, for example, waited for a signal from a 15-minute trade setup on a 15-minute chart, you would get in the trade way too late, and the risk would be too high. So, for example, I would typically match up something like a 144 tick chart against a setup on the 15-minute chart, or even a setup on the 3-minute chart. As long as it's a lower time frame where you can kind of see the micro, the swings in the market, that's all you need. Okay, so I'm just giving some examples as far as the tick charts. Some people will use as low as a 34 to 55 tick chart for a setup in the mini Dow, and then also 89 tick, 144, or 233. It all depends on, you know, how tight you want to play it, and also if you're a scalper or longer-term trader. Okay, most of the times in the chat room now, when I set up an S&P, I think people are typically using a 144 tick chart. Okay, a lot of people never write down a trading plan, and this is really, really important. So as far as, you know, writing it down, you want it there so that you can, you know, go back to something, and you can't all of a sudden change your rules, which, you know, people will tend to do in the middle of a trade. At least you have something that says, no, this is exactly what you're supposed to do, and if you have the discipline to follow the plan, more often than not, you'll have a winner rather than a loser. Okay? So what you need to define is the size of your trade, and sometimes that will differ. If it's some people will double their size if it's a trend trade, and then only go you know, one regular unit if it's a counter trend trade. You have to define what trade setups you're taking. So in my case, it would be, well, the setups are either going to be a symmetry setup, a price cluster setup, or a two-step pattern setup. Okay, so you have to define the setup. You have to define the entry trigger. Okay, are you going to use something as simple as you know, a moving average crossover, or something like I'm going to show you here? And then you want to understand your money management rules and any nuances. For example, you know, a nuance would be you tighten up your stops further when you make a minimum target of 1.272. Okay, that type of thing. So let's say, you know, this is an example. You're choosing a lot size. It's 3 units. Okay, the setup, a price cluster, symmetry, or two-step pattern. Okay, and it needs to hit the zone within 3 ticks. Okay, either plus or minus. It either has to be, you know, above it or below it or in it. The trade trigger, and you can have more than one trigger if you like, and you can look for either one. So in this case, I'm saying either a squeeze trigger, just using the, you know, the TTM squeeze, or taking out a prior swing high or low on the tick chart of your choice, and you know, be very clear about what you have to follow, and try not to shift it. You only want to shift your plan if you've tested it and it's worked for you in the test phase. And then as far as money management, you want to know what's your initial stop going to be. So let's say the initial stop, if you were doing the mini-size Dow, would be 15 ticks per each contract. And then as far as how do you want to manage that, you can exit the first unit at +5, exit the second unit at +10, and the third unit has a trailing stop that once there's a 15 tick profit, if once there's a +10, you have the auto trail. Okay, and that you can do on NinjaTrader and some of the other plans, or what do you call them? I don't know. There's others like Strategy Runner, that type of thing. Okay, and then if there are any other, you know, the nuances, for example, you're allowed to tighten the stop further if it gets near an extension target, or that type of thing. So you want everything written down so you know exactly what you're supposed to do when you see your setup. Now also, you know, I realize that a lot of you probably already have plenty of experience in this area, but for those who don't, you want to make sure that you keep a log of your trades. One of the ways that you can do it is actually print a picture of a setup and then write down, what was my trigger entry, what was my initial stop, where did I exit the trade. Obviously you'll see whether you made or lost money, and if you made any mistakes, write it down so that you know what to address as far as issues there. If anybody's not familiar with NinjaTrader, it is a great way to automatically handle the stops and money management part, so that your only decision is the entry. So if you just set up an entry for, in this case, this is showing 3 contracts, 3 lot, and then there's the stop loss in there, which is 15 per contract. It shows the profit target on the first one as 5, profit target on the second one is 10, and then you have to put in a some sort of profit target. You can't put unlimited, so I just put 150 in there for the third one, and then I set it up where it has a loose trail. Okay, so all that can be automated, where all you need is the actual entry, and then the money management part is taken care of for you. Okay, so this is what the stop strategy would look like for the third contract in that case. When you're up 10 from that area, then it trails the stop to 15 away. Now, I'm not actually an expert on the NinjaTrader, but they have a ton of phenomenal classes on it. Does anybody already use that? It's the automated trading strategy. All right, slide 4. Yeah, this is slide 4. Okay, but I'm going to make this available. I'll have to ask Priyanka where we're going to make the PowerPoint available. Okay, so I actually want to get into some of the examples, and I'm actually starting with one that occurred yesterday. Okay, this is one that if you guys are not familiar with Twitter, I do post some charts on Twitter, and I did post this one. This is an example of a 15-minute setup that we had in the chat room yesterday, and I had a nice cluster. We also had some levels that the market did go through initially. Okay, we blew through it, but there was a cluster at 961. Looks like 961 and a quarter to 962 and a half or so. Okay, you just kind of round it, 962.38, and the larger trend was still up. So we were looking for buy triggers if it held this zone. Okay, so that's the setup. This next chart is, using the TTM, trend and squeeze indicator, and there are 2 different ways to enter. And I did put this in, my book chapter on triggers. Either you can enter on taking out the prior swing high. Oops, I was trying to grab that pointer there. There it is. Let me drag it. Okay. Either taking out the prior swing high. So if this swing high was 963.75, once it ticked 964, and you can enter on a stop if you want, but once it ticked 964 even, you're long. Okay? And your initial stop, you can either use a stop that, a point stop. Some people will say, well, I'm going to risk 2.5 points per S&P trade. or you can actually have the stop underneath the swing low. So there's a couple of different ways that you can handle that. Typically, if you're using something like Ninja, you know, you just have a predetermined stop. If you want to monkey with it, you'd want to make sure that it's underneath the prior low, the low made prior to the trigger here. Okay, so that would be one entry at the 964 area. Okay, secondary entry would be on a pullback after the breakout. So that would have been, you know, after you pulled back right around this area. What I look for as far as a pullback, if you just want, you know, a rough idea, this is illustrated on a 233 tick chart. Okay, I typically look for a retracement of the prior low to high swing, and you want it to come in anywhere between 50% to 786. And ideally, you see some overlap of a symmetry projection of this prior high to low swing here, projected from the new high. So that's going to give you kind of a range where you buy that pullback, and then still either you're going to have the set stop, whether it's, you know, 2.5 points on NinjaTrader or something like that, or you place the stop underneath the low that was made prior to the entry signal. Okay, so there's two different ways. Now, some people don't like sitting through a pullback, so, or, you know, after an entry, and you probably get a pullback after a breakout, I would say about 75% of the time. So for those people, they'll use the secondary entry. They'll wait for the pullback because they might feel that they have a little bit more of an edge. Okay? But 25% of the time, you're not going to get the pullback and you're going to miss the trade. So, you know, it's your choice. Are you okay with missing the trade 25% of the time or not? So that's an example of the trade that we had yesterday. And let's say, for example, if you took, you know, the first trigger, you would be in at, you know, 964, or maybe, you know, it came in at 964.25 because, you know, you stopped yourself in, that type of thing, or you used a market order. And the eventual move, you know, it wasn't immediately straight up, but the eventual move was towards the target of 980. So we got up as high as 979 from where your entry would have been, which was around the 964 area. Okay? Now, along the way, there's a good chance, depending on, you know, how you set up your money management strategy, you might have gotten out of some contracts, but then what you do is you try and keep a runner for at least the full move. My target for any of the trade setups here is always 1272 of the swing, so of the high to the low into the price cluster zone. So that was a pretty good setup. Now, obviously, it doesn't always work when you get triggered in, but your risk is extremely well defined, and what you have, you know, that defined your entry, or at least, you know, the beginning of the trade, was the setup. Now, if you want to use something else, you know, as a trigger, which you can, obviously, just go back to your tick charts and see what the market did with whatever trigger you may have been using against that zone. Okay, the actual, let's see, that came in, that was yesterday at the 962.5 low. Okay, we should be up to slide number 10 here. And let's see, I'm actually set up as Fibonacci Queen on Twitter, so if you just search Fibonacci Queen, you should find me. There's also a link on my site. All right, this is another setup. This occurred a little bit earlier in the week. This was July 22nd. This was in the Russell contract. Now, the larger pattern in this market was bullish, higher highs and higher lows, so I was setting up the buy side on the 15-minute chart. So that's the setup, that's the raw material to start looking for an entry trigger. So there's the general zone, it's holding. There's some other things that I like to look at, and it's really ideal if you're above the 34 EMA, so that's one of the things that I have here. This is a 34 EMA. I don't use many indicators, okay, but that is one that I use. And the CCI readings, for a buy, you'd like them to be above the zero line, ideally. For a sell, you'd want them below, okay? So that was all looking good as far as the indicators. But by the time you would get a trigger on this chart, the trade would be half over. So again, you need to go to a tick chart. And actually, after I get through a few of these charts, I'll take a peek at the questions and see if it makes sense to answer them now or later. Okay, so this tick chart, this is a 233 tick chart on the Russell. And again, if you see on the left-hand side, that you're looking at a pattern of lower lows and lower highs into the support cluster, okay? What you want to see is a shift in pattern to tell you to enter against that trade setup. So again, in this case, what do you want to see? I want to see it take out a prior swing high. So in this case, this is the 524.20 swing high. So you could have placed a stop to buy at 524.30 on a buy stop, or you just click the market button if you trade above that. I wanted to see at the time that you broke out above the prior swing high that the trend bars turned blue for a buy. And I wanted to make sure that you had either you're flat on the indicator, or above for a buy. Okay, and where you did over here, actually that looks like, I'm not 100% sure. I don't actually use the squeeze, but I do use the trend bars, and I use this histogram on the squeeze, but not necessarily the way that the guys use it in TTM. There are videos on the site for how that's used. Okay, so that's another alternate. But here you would have had an entry. Now, depending on how you managed it, some people get out when they have a certain amount of ticks. They'll get out of partial, and then try and keep a runner. Now, depending on where you place your stop, and that's a whole other story, how much are you willing to give back to allow yourself to participate in a larger move? Well, if you've taken profits on partial, you're probably okay with sitting with maybe the original risk or going to a break-even stop. Now, in this case, if you went to a break-even stop, you would have been knocked out on this pullback, okay? If you used the original risk or placed the stop underneath this low, you would have participated in a lot more in this trade, okay? And that really depends on your trading personality as far as how you want to do it. If you're uncomfortable sitting through pullbacks and you're fine with just taking a profit when the market stops going in your favor immediately, then that's the way you should write up your plan. You have to see what works for you. Everybody is different. Okay, I've got a question. Do you enter limit with a fixed stop? I usually don't. I would just press the market button, the market buy. If you take out, I don't really put in stops. Actually, I have somebody is trading for me during the day. But when I was messing with this, I would just do a market order on Ninja. some people would place a buy stop, and that's okay also. Let me get through more of these slides here. I think I'm going to take more of the questions after I finish this this PowerPoint, and then we're going to go into some live charts in part 2. All right, so this is an example of a 144 tick chart in the S&P, and it's an example of you know, a trade setup where you could either buy it when you took out the prior swing high. So that would be one entry. And again, you can either place the, you know, use a regular price stop on Ninja, or if you're not doing that, the best place is to put it under the prior swing low in this case. Or, you know, if it was, you know, on the flip side, the prior swing high. So that would be 2 different options as far as your stops. And here, the secondary entry would have been on a pullback after the breakout above this prior swing high. So the pullback here, what I did was I just ran the retracement, you know, the low to the high. And usually, you know, when you're looking at the pullback, I look at anywhere between 50% and 7/8-6. And I also like to see an overlap of symmetry. So I will take the prior high to low swing in this case, and then project from the new high. And that's what gave you a symmetry projection. So you'd be looking at, I think that overlapped the 7/8-6 there. You'd be looking at, you know, a buy, say at anywhere from 889.5 to 890, and if it pulled back, you click the market order button, or you can just put in a bid if you like. But if you put in a bid, there's a lot of times where you're going to miss the trade, and if it's a good trade, you know, you're going to be pissed. So I prefer market orders. Other people prefer to put in a price. Okay, now I wanted to show this example because, hey, you've got to be prepared for it. In this case, if you would have gotten in with the first entry, I need to find that arrow again. There it is. And you would have been stopped out probably down here. That wouldn't have been very, very good trade. But if you took the secondary entry, it would have been a little bit less risk also, but again, you would have been stopped out. But at least you know what your risk is when you have one of these entries. But this is also a case for taking the secondary entry because there's typically less risk involved. All right, now I'm just going to go through, you know, quite a few more setups just so you get an idea of what you can look for on the tick charts. This is actually a setup. This is on the 3-minute S&P. Okay, it's an old example, but you know, this just keeps on repeating itself over and over and over again. The 3 setups that I use, they just continually repeat. So it's almost like looking at a chart, you know, that happened a week ago. This setup was actually a zigzag or 2-step pattern. Okay, with the 2-step pattern, we're looking at a zigzag that is correcting a prior swing. So in this case, we are correcting, let's see, this prior low to high swing. Hopefully you can see the arrow. And there's the zigzag. And what you want to see as far as the 2-step pattern, and again, this is defined in the book, it's also defined in the other webinars, but I'll just give it to you quick here. Typically want to see 100% of the first swing. I want to project 100% of that as part of the zone for the zigzag pattern. I want that to overlap a retracement of the prior swing that you're correcting. And it doesn't matter. It doesn't have to be a 618. You know, it could be a 382. And then also I want to see either, ideally, 1272 or 1618 of the prior low to high within the zigzag extended. I want to see that overlap. So here you can see that we had anywhere from this 1457 to, it looks like 1458 and a quarter area for the setup. Okay, so once you hold a setup zone, go to your trigger chart. Now, again, you'd have to use a tick chart, or even maybe you can use a 1-minute chart if by chance you don't have access to tick charts. A 1-minute chart might break down enough where you can, you know, see a trigger that would get you into the market pretty close to this zone. Okay, so let's take a look at the next slide. Looks like the low is made at 1458 and a quarter. Okay, so here's where the low was made, right in here. Here's the prior swing high, and here's your trigger. As soon as it took out the prior swing high, the bars turned blue, and then again here on the histogram you had to be either flat or above zero, which you were. If you had gotten this trigger, as far as the rules that I've created, if it took out a prior swing high, but you were below zero, you wouldn't take the trade. Okay? So again, the first entry would be here, where you took out the prior swing high. A secondary entry would be on the pullback after taking out that high. And you have to be relatively quick with these because this is a, you know, an 89 tick chart, and it's going to go pretty quick. You can just eyeball it if you have a pretty good eye for, you know, what would be about at least a 50% retracement or something like that. Okay, this next example is 15-minute chart in the S&P. It's actually another zigzag pattern. There were two trade setups here. Either the 1466.5 to 1468 area and the 1463.5 to 1465 and a quarter area. Okay, so as long as we tested and held either one of those areas, we're going to go to a tick chart and look for a trigger. Okay, I am going to do the questions after I finish the presentation here. Okay, so it looks like we held the first zone with this two-step pattern. The low was made, looks like 1467.75. So let's go take a look at the trigger chart. Okay, here's where the low was made. This is a 144 tick chart on the S&P. Here's where the low was made into the first price cluster zone. And here's the first prior swing high that got triggered was right over here. Okay, and again, the bars turned blue when we took out this prior swing high over here. So you had the bars turn blue, you had to take out the prior swing high, and the histogram was either flat or above zero for a buy. Okay, so again, that's your entry. You really did not get a pullback in this case. Okay, so if you waited for the pullback on this particular trade, you would have missed this trade. And let me double check, but yeah, that actually rallied to, that was a 16-point rally from the low. I mean, obviously you're not going to get the exact low to the exact high, but the name of the game is to try and catch the middle. The, again, minimum target, which we do not always meet, but the minimum target for my setups is always 1272. And definitely, you either want to be out of most of your contracts or trail up the stops a bit tighter if you get into the extension areas. We did have an extension on the daily chart in the S&P the other day, and once it hit that, you know, it took a little while, but that's where we had a very nice, healthy correction develop after we hit that within a tick. Okay, when we get into the live charts, I'll go over some of that. Okay, this next chart is the Russell. This is when I was using quote.com data there. So the symbol is kind of funky. Now, is that quote.com or the old e-signal one? Anyway, that was before the ICE took over. All right, let's see. This setup was, let's see, this was timing. Yeah. Okay. In the chat room, I use a timing histogram on the Dynamic Trader software. That's by my mentor, Robert Miner. And it's, you don't really have histograms like this, except there's some things similar in advanced debt. The only problem with that is that you can't choose, last time I had used it, you can't choose the highs and lows that it's running the timing histogram from. In Dynamic Trader, you pick the highs and lows that you want reflected in the timing histogram. So in this case, this is an example of when, you know, some people might just use timing for a trade. So here is the big standout on the histogram that shows time resistance to the rally. The market had spiked up. It looks like it was on the opening. This is where, you know, it's kind of fun to use the opening range statistics along with timing, because if you have both timing and the opening range and it reverses, it's probably a much higher probability trade, because I know that those stats work pretty well. Okay, here the high was made at 806.20. That was on the Russell. So here's where the high was made. This is a trigger chart. This is an 89 tick chart in the Russell. So as soon as this swing low was violated, that was a sale. Again, in this case, you didn't get the pullback. So if you waited for a pullback, you wouldn't have gotten into the trade. And again, we typically get pullbacks about 75% of the time. And then there was another trigger, you know, if you just use the squeeze. Okay, let's see, this next example is a symmetry trade setup on a 3-minute chart in the mini-size Dow. Okay, symmetry, the definition of symmetry is similarity or equality in swings in the same direction. So here, this is where I took a prior corrective decline, and it was 27 points. Okay, it shows you, you can label this in Dynamic Trader, and it will tell you how many points, how many bars it's taken, what's the price, what's the time that it occurred, and all that good stuff. So I took that prior high to low swing of 27 ticks, and then I projected it with the 3-pointed tool that you do for the price work, and I projected it from this last high at 135 even, and that gave a projection of possible support at 134.73. In this case, symmetry was equality because it was 27 points and 27 points. I like to use symmetry to help get you in the market in the direction of the trend. And since we had kind of shifted gears over here and started, we went from this healthy swing down to at least shifting patterns right over here. So because it shifted patterns, took out a prior swing high over here, I wanted to set up the buy side. Okay, so the actual low in this case was made at 134.73. And here's an example. Now, you know, when I used to listen into the TTM room, Hubert used to use the 50-tick chart quite a bit. So that's this example. This is a 50-tick in the mini Dow. But instead of just, you know, taking a signal off of the trend indicator or the squeeze or whatever, you had something to back it up as far as the symmetry support. You just want something to tell you that it may have value as a level or a zone or a cluster. So here, once you took out the prior swing high, the bars turned blue, okay, right here, and you had to be either, you know, flat or above zero. And then there's also a squeeze. So, you know, there's two entries there. Okay, this next example is, again, the Russell. It's on a 3-minute chart. Now, I only do one 3-minute chart during the day nowadays because there's just too much to keep up so many of the charts, and the setups that occur on the higher time frame actually typically will give you more bang for your buck. But here we had a couple of symmetry projections. We hit and held the first one, and this is also what I call an ideal setup. So for anyone you know, who's read the book, all my setups are in there, but this is what I call the ideal setup because it includes symmetry. Okay, so there's a symmetry projection. I always use red for my symmetry projection, so you know when there's symmetry. And it was pretty much above the 34 EMA, so you had that on your side. And also, you at least wanted to see the 14-bar CCI above zero. In this case, you had both 14-bar and the 50-bar above zero. So that is really a higher probability setup when you have those indicators on your side. Okay, so the actual low was made at 799.40. Okay, and this next chart shows you, here's where the low came in. Here's a prior swing high, where it took out, it took it out over here, so your entry would have been over in this area. Now, I didn't show you the secondary entry in here, but there was a nice pullback. So if you would have just run the retracement of this prior low to high swing, you know, and just run 50%, 618 and 786, and then see if it overlapped this prior high to low swing projected from the high, there was probably symmetry right around this area where it pulled back. So either one entry here, another entry here. Okay, maximum stop should be below that 799.40, or you use the price stop. And again, it depends on, you know, how you want to work it. Some people don't want to mess with changing any of the stops on their platform, and you know, some people will. But generally, let's say most people that I know, they just have a you know, a standard stop. They're not going to risk more than 2.5 points on an S&P trade, for example. Okay, this next example is another symmetry setup. This is on a 3-minute chart in the S&P. I still do the 3-minute chart on the S&P. That's the only low time frame chart that I have in the chat room at this point to kind of help fine-tune entries against the higher time frame work. Now here, let's see, you had a prior correction that was 4 3/4 points. You had another one that was 4.5 points. And then I projected both of those prior corrections from the new high at that time, which was 1465. And that gave you these two possible support levels at 1460.25 to 1460.5. Okay, actual low was made at 1460.5. That was a 3-minute chart. So again, I mean, you can't really see a buy trigger on this 3-minute chart. You need to go to a tick chart for an entry here. So let's see, low was made at 1460.5. Okay, so here is where your low was made. Here's swing high for a trigger. Here's where you took it out. So this would have been your first opportunity for an entry. But let's say, you know, you turned your head, you missed the trade, and then you saw it pull back. I don't know if you can just see it, you know, visually. If you took this prior high to low swing and then projected it from the next high, you're going to get the 100% projection right around here where it pulled back. Might have gone slightly through it. And I can almost guarantee that it either overlapped, you know, anywhere from 50% to 786 of this last swing. So that would have been a secondary entry. Maximum stop, have it underneath here. Have it underneath the low that was made prior to the reversal trigger. So here's the low. There's the first trigger. So that would be, you know, the maximum stop underneath there. Okay, and then that was that setup. That was 10 3/4 point rally from just a simple symmetry setup. Okay, this next example. Now, when time and price come together, these really are the highest probability trade setups. But actually, let me rephrase that. When time and price come together in the direction of the trend, which it did in this case, I'd have to give it, you know, a higher rating. We do have time and price come together, and it will help show us when a move might terminate. But if it's counter to the trend, the odds for the trade working out are not going to be quite as high as when it's a trend trade. So in this case, we're looking at S&P 15-minute chart. You can see that the general pattern is higher highs and higher lows. Okay, this is, you know, similar to yesterday. General pattern was higher highs and higher lows. We did violate some of the support on the way down, but when we finally did get one of the cluster zones to, you know, stall the market at least, we had a chance to go look at a trigger chart. So here we had a price cluster zone that included symmetry at the 1453.75 to 1454.75 area. And it just happened to coincide with timing for a low. Now the timing was projected from this prior swing high, and it was done with, you know, the histogram within the program, and it basically took the swing highs and lows that I had marked, okay, using the swing file that I created within the program. So that's where you're seeing a visual of the clustering of time cycles that came together from these prior swings that just happened to overlap this key price support. Okay, so here the low was made within this first zone at 1454.5. That was a 15-minute chart. Now, this one was a case where you actually came back and retested the support and then got a squeeze trigger over here. Okay, and if you want to learn more about the squeeze triggers, if you're not familiar with it already, there's a link with a video on the website. Okay, you want to look for the TTM trend and squeeze indicators. All right, let's take a look at, let's see what I have left here. I might be almost done with these charts. Nope, not quite. Okay, we have slide 29 is the Dow 15-minute chart. It's another one of those zigzag patterns into support. And again, if you see the zigzag and it holds the zone, go to your trigger chart. This is a 15-minute chart. Now, in the case of a 15-minute chart, you could get away with using a 3-minute chart as a trigger, or a 1-minute chart, or a 2-minute chart. Okay, but I still like looking at the tick charts a little bit, a little bit better. You're pretty much guaranteed to get into a trade setup, close to the zone. Okay, so here the actual low is made at 136.02. Okay, so here's where the 136.02 low is made. And then, now you could use the prior swing high over here, but you had a new one develop here. So this would have been the closer entry. So once it took out this prior swing high, right over here, you could take that entry there. And again, maximum stop you would want to be underneath 136.02 or your standard price stop that you put in your platform. Okay, so in this case it said it triggered with a rally above 19. So let's say you entered at 136.20 in this case. Okay, wait, that's not the... Yeah, 136.20, and it was a 15-minute setup, and we got, actually it was a larger target from a swing in the past, I can tell, but that was a 138-point move from the low. You wouldn't, again, you wouldn't have gotten the exact low, and you wouldn't have gotten the exact high unless you're very, very, very lucky. But if you can catch something in the middle, that's the name of the game. You want to be consistent, and you also want to see how long you can, stay with a runner. Because if you just, have your set exits, you're going to miss, those big whoosh trades where the market just really goes in your favor, and you just want to trail it up and ride it as long as the market allows you to. Okay, now this slide 31 is just to give you an idea of why you might want to use a filter, and specifically I'm showing you the ones that I've looked at. Now there are plenty of different ways to enter the market using my work as a base, but I'm just showing you what I'm most familiar with. Now, as far as 3-minute chart, if you're interested in the buy side, ideally you want to see price above the 34 EMA, and you want to see the 14-bar CCI above 0. This is just an example to show you that when you hit the price cluster, in this case, the warning that it might not hold was the fact that you were underneath the 34 EMA at the time that you tested the support, and you were also under the 0 line with the 14-bar CCI. So those were both warnings that the trade might not work. Now, some people will use this as a filter for this trade, and some people throw it out the window. It's your choice. I don't exactly have statistics on it. I don't have time to set up statistics, but it's just something that I've observed, and I prefer having these indicators in my favor if I'm looking at a trade setup. So here you did get an initial bounce off of this zone, but it failed miserably. So those are a couple of filters you can use if you care to. Okay, this next example is also a 3-minute chart in the S&P, and here you had the same thing going on. Here's the zone. Yeah, there's symmetry there, and it could have held, and you did get a little micro bounce off of there, but the warning sign was that you were below the 34 EMA at the time that you tested the support, and you were also below the 0 line with the 14-bar CCI. Okay, so those are a couple of filters. If you want an extremely conservative trading plan, you won't see a lot of trades that will set up this way most trading days. You might get just one or two. Okay, but this is just an example of something you could use. If you see a pattern of higher highs and higher lows, you want to look at the buy side. You want price above the 34 EMA. Okay, and the settings are 34 at the close, and it's exponential moving average. You want the 50 bar CCI above 0, and the 14 bar CCI should also be above 0. And then you look for one of those buy triggers, taking out a prior swing high, in this case, if it was for the buy side. And then turn it around for a short. But waiting for, all of those things to line up, that's a really, really conservative trading plan. Also, ideally, if you are taking, for example, a symmetry setup on the 3-minute chart, ideally you want it to be in the direction of the higher time frame. So, for example, yesterday when we had the initial buy setup that projected for much higher prices on the 15-minute chart, it would have been more ideal to look for a buy setup on a pullback on the 3-minute chart. When you're in disagreement, that's when it's a little bit more difficult. And, if you want the odds on your side, or, the higher percentages on your side, then ideally you wait. There's a lot of people in my room that don't like waiting for the trend trade, and they like to scalp, with the counter trend stuff. I don't think that ultimately they're going to get the best results, but if that works for them, that's the way they use the work. Okay, now as far as keeping it simple, okay, the best way to make money with the work is, again, with the trend. You want to buy against support clusters in an uptrend and sell against resistance clusters in a downtrend. Okay, you can do the counter trend stuff, but again, wouldn't you rather have the odds on your side? Okay, if the market moves in your favor, most traders, especially if they're day trading or scalping, want to move their stop to break even ASAP. Now that's all going to depend on your own comfort level and trading personality. There's some people who can't stand to give back money once they have at least a few points in their favor. Those people probably should go to a break-even stop almost immediately. Others who want to try and hold it for the long run, maybe you keep your initial stop underneath a swing low or swing high, depending on which way you're coming. Now, what I'm going to show you when we go to the live charts is, how you might start to trail stops up if you want to use symmetry. Now, when I work with Denise, who trades for me, and we're doing that, the managing accounts together, what I do is I hand do the symmetry for her and have her trail up a stop once we're in a good trade. So I'll give you an idea of how you do that. And otherwise, you have the program do it for you. If you trade multiple contracts, now not everybody can trade multiple contracts, but if you can, consider exiting part of your position and then keep the balance with a trailing stop. The initial objective for a trade off of a zone is 1.272. And if you're talking about target for a two-step pattern, it's the 1272 of the whole zigzag. Okay. Now there are plenty of times where the market will give you more than the first target. The second target is 1.618. My third target is always 2.618, and sometimes it will go even further. Okay, and we don't know. I mean, when the market gets wild, at least just trail up a stop and allow yourself the option to stay in a trade if it wants to go beyond all three targets, because it has happened. As far as, again, the entries, the best trades, if you set it up on a higher time frame chart, you want to trigger it on a lower time frame chart. Now, there are times where I have setups on the daily chart where it might not be appropriate to take an entry using a tick chart because you might get a lot of false triggers. In that case, I typically like looking at a 15-minute chart to see if it's going to take out, a prior swing high or low to indicate an entry. Okay, and last but not least, it's just a little reminder about trend. If you take the clusters in the direction of a trend, it's a winning strategy. If you take it opposite, the odds are just not going to be as high. Some people, like I said, are very good at it, but anybody who's new to the markets, I tell them to, stay away from those. All right, let's see if we're done with those slides. Oh, not yet. Okay, just a few guidelines. I start looking at the daily chart and then focus down to the shorter time frames. Now there are times where I'll take a trade setup or consider one that's not in agreement with the daily chart, but as long as there's a pattern that supports me. So let's say the daily charts might be bullish, but the 15-minute charts are clearly showing a pattern of lower lows and lower highs. Well, if I get a setup on that and it's at least, in agreement with the 15-minute trend, that's okay. It's not going to be, again, as high a probability as if you were on the same side as the daily chart, but it's still a good trade if you get a trigger. A few rules about the trade setups is that, once a price relationship is violated by a decent margin, it's no longer valid, and like old support does not become new resistance. It doesn't work that way. If something is violated, I set it up on the flip side with new Fibonacci price relationships. Okay, again, different ways to place stops. Either, just set it up on your platform, or you want to either put it for the buy side, put it underneath the low that was made prior to the buy trigger, or put it above the high prior to a sell trigger. Or some people will actually choose to give it a little bit more room. So if that's the case, then you can use the extreme of the price cluster zone if you want to give it just a bit more room. Okay, let's see. If levels are not clustering really well, you can qualify a zone by seeing where the symmetry overlaps it, because I consider symmetry overlapping the other price relationships much stronger price setups. Okay, so that's one way to look, because there are times where the market just won't cluster well, and I refuse to give out a trade setup, because if it doesn't set up, you're just setting yourself up for failure because you're not waiting for the edge. A good rule of thumb is the best setups come when at least 2 degrees of trend agree. So if you have a 60-minute chart that's bullish, then you're better off taking the 5-minute trades on the buy side. You want to watch both the price and time of prior corrections to help identify some low-risk entries. There's a good example of that. I believe I posted it on Twitter, where I had a swing up that was 11 trading days in the euro, and then we had a second swing that was also up 11 trading days, and it was into both a symmetry projection and a 1272 price extension. It wasn't exactly equal, but it was very similar, and you had a very healthy decline off of that area. We're probably going to come back through it, but as far as, on the first test of that zone where the price and time parameters came together, it was worth some money. Let's see. Again, the rule that probably everybody's talked about is that, you know, cut your losses quickly and let your winners ride. There are people who get so excited about profits they take them too quickly, and then they can't stand taking a loser and they let their losers ride. Well, you know, you're not going to make money that way. Let's see, another hint is don't attempt to be so perfect in your entries. As long as you're within, you know, a few ticks of the zone, you know, whether it's a, you know, a symmetry decision, a price cluster zone, or a two-step pattern zone, you know, you don't have to be perfect. And you're also going to look for your confirmation, a trigger. Let's see, the market's never wrong. One of the things, I don't know if anybody got into this situation this week, but I heard that there were a lot of people that were trying to short the market because they thought it was overbought, it's gone too far too fast, and all that good stuff. But the thing that would have kept you in the market on the right side, or at least if you didn't want to buy up at those levels, would have kept you from shorting the market until symmetry was violated and it was at least a safer bet. That's one thing that I find a lot of people will do. They'll look at indicators, but not look at the symmetry in the market. And I usually, you know, try and keep people on the right side. So that was very helpful this week. All right, now let's see. All right, and then also let's say if you, you know, set up a trading plan and it's not working, there are a number of different elements that you could shift to see, you know, if it works better, okay? Sometimes it can simply be that your initial stop is just so tight that you're really going to get stopped out 75% of the time. That would be, an example of that would be somebody putting on a bond trade with a 2-tick stop. You're going to get stopped out more often than not if you have a stop that's that tight. Some people just need to adjust the stop on their trades. Maybe, you know, widen it to, you know, to, well, let's say in the case of the S&P, let's say you had a 1-point stop and you're getting knocked out all the time. Well, maybe if you put it to 2.5, you wouldn't be stopped out as much. Okay, so that's one variable. So you always have to look at what might be wrong with the plan, what's not working. Another time, or there was, I think one of the guys in my chat room was having a really hard time making money, and I would ask him, well, how do you do an entry? And he was doing entries for a 3-minute setup on a 3-minute chart. So all I had to do in his case was tell him to start using the tick charts, because that was going to get him involved against the zone much quicker and really define his risk. So that's another variable. Now the money management part of it, you know, that's a whole other element. You know, some people, it will make a huge difference in their plan if they take off part of their position and move a stop to break even at a certain point. Again, you have to look at all of these different variables and decide what makes sense and what doesn't. You know, what's working, what would the results have been if you used a different way. Okay, and that's some of the work that you have to do on your own. And again, your trading plan needs to fit your personality. I can give you a suggested plan with a certain amount of ticks and that type of thing. But if it doesn't fit your personality, you're not going to be able to adhere to it. And again, altering just one element sometimes can turn a bad plan into a good plan. So that's what you want to look at as far as your own stuff. Now, I'm sure that a lot of you have either read Mark Douglas's book or you know, any of the other market psychologists' people. I've worked with Libby Adams. She's really good with the NLP. She also works with Van Tharp. I know Mark Douglas. His books are really good. And I know there are others that I'm not as familiar with. But I do believe that psychology and discipline have a lot to do with whether or not you're going to make money with this work. I have a number of different people in the chat room, and I have some people that are extremely successful, and then I have some people that are still struggling and they're losing money. And what's the difference? Everybody's getting the same setups. Now, the difference could be in the trading plan, where they might need something tweaked, but it also could be in, if they've got negativity programmed, subconsciously, they might create something to where, the end results are not going to, or they'll actually match up with your subconscious beliefs. And, you may not be a believer of that, but I think they say about, I think at least 85% of this game is psychology. Now, I don't know if that's the truth, but it sure seems like it. So that's another thing that you definitely want to make sure that your mind is in the right place. If you're having any self-defeating thoughts, you want to go into looking at some of those things, and also you want to see if you're actually following your trading plan, because if you do have a trading plan that works for other people but it's not working for you, something's wrong there. Okay. The work that I do is, it gives you really, really good definition. Obviously, nothing works 100% of the time, but when it does work, the risk-reward is really pretty good. So that's, there's no holy grail as far as methodology, but what's in between your ears, I think that's really the most important element after you do everything else.